You know, I was having a dinner last week at the home of the Australian Consul General here, and we got to talking about China, naturally, since Australia is is probably the largest, quote, Western country near China. And it's interesting because we also were talking this afternoon about Brazil and China, and it seems like there are certain countries like that, I guess very resource-driven, that are very closely tied to China. Australia's economy tied so closely to China's. Brazil's economy tied very closely to China's. Is one better off actually than investing perhaps in some of those surrogates rather than directly in China?
Certainly that has been a theme. I think over the last 5 years, one of the major theme investment has been squeeze Chinese and Indians, right? Buy what they don't have and sell whatever they produce. So because of that, if you look at Chinese GDP, a majority of it is tied up to the fixed asset investment. Because of that, then the resource-rich countries or markets has been bought. But I think that may have been played out. Not necessarily, if we have QE2, probably will play that for another 6 months longer. But that, to me, I think that theme is very, very well understood. The global cyclicals. Going forward, how we gonna do that could be quite different. Whether it's gonna be in soft commodities, to bet that Chinese living standard improve, that people are gonna eat more pork or beef. Or it could be that luxury goods. Obviously, we have already seen the fantastic results from every single luxury goods manufacturers. Always come from the world travel. Those are the things that could be a new thing.
Before we open it to questions from the floor, because I'm sure most people out there are much smarter about these things than I am, but I'd be interested in any of your picks. If you want to tell us any companies you especially like in China right now or for the future. Here's a chance for you to talk up your portfolio, right?
Well, if we start talking about portfolio, first we have to probably, this session probably is not long enough. I hold about 900 names there. Honestly, most of the people here are still somewhat related with quantitative investment, and quantitative investment usually we bet on the factors rather than stocks. So because of that factors nature, we tend to buy a few stocks instead of just one to manifest our views. But still, as I said, I'm quite interested in the domestic consumption theme. I think the cheap hotels, some of them are listed actually in U.S. The airlines, I think, is quite interesting, and you could also probably some of the consumptions could be. I think mostly because or consumer staples could be because they are just misunderstood. But that aside, another one is probably domestic or listed in Hong Kong's domestic industrial shops. That's kind of interesting.
They're building for the Chinese market or for export?
They're building, yeah. As I said, Chinese are very good in reverse engineering, or we call it, sanzai. Because of the very strong capability in reverse engineering, anything that, if you have foreigners build a plant in China, very soon it will be replaced by scores of Chinese companies. And as for now, China probably is world leader in terms of wind power, in terms of high-speed trains, all those things. So for that, follow that theme, many of the manufacturing, as we talk about here, because U.S. over the last 15, 20 years has carried on this outsourcing policy where many of the manufacturing capability has moved to China, which right now I think a lot of people has doubts whether the policy plays out or not. But because of the phenomenon, the company that's relocated to China first was part of some of those manufacturing companies, and over the last 10, 15 years, China certainly has learned many of the tricks. And for that, the domestic part of that economy, where they learn from the foreign manufacturers, and that particular sector, I think, is quite interesting because they are at the stage now they can compete almost every stage.
Good. Well, let's open it to questions. If you would wait for the microphone to get to you, since we are being broadcast or taped or what have you. Please.
Thank you for your comments again. There's been a lot of talk about property bubbles, and in fact, some famous investors are quite negative on the China outlook based on what they see as zombie, empty cities. Can you comment on that?
Actually, I was recently in China just a couple of weeks ago with the same question that you have in mind: was property a bubble? Well, is gold a bubble? I mean, we could debate that endless. But the question now, at least, is that for the private developers, they're making lots of money. You know, before, I mean, a few years ago, they had the issue of the cash flow because they have to buy large plots of land. These days, probably all of them have anywhere from 5 to 10 years of land, reserves. And with that reserves, actually, they make lots of money just building those houses. Obviously, you know, most of the commodity houses are bought by maybe 10-15% of the Chinese, but still they're buying. And many of them has no effects. You know, the government policy really hasn't put a dent in terms of their buying frenzy. I mean, the third and fourth house they put on is 50% cash or maybe all cash. So from investor point of view, bubble or not, I think it's not important. The important is that can we get on before it bursts, right? So for me, I think the urbanization process will still go on. I mean, you look at China, still the ratio of urbanization is still much lower than the developed countries. And if the economy will sustain its growth, sooner or later the process has to finish it. And if that's the case, then the housing, especially in the first tier or second tier, maybe not necessarily third tier, but first tier and second tier city, I think is quite safe.
But my wife is in commercial real estate, and we talk a lot about this question of bubbles and liquidity. My sense is that the Chinese government has been pretty intent on squeezing liquidity out of the market. I mean, every now and then, quite regularly, in fact, they seem to take actions that would do that. Are you suggesting that this hasn't been effective yet, or that it could be?
Well, it certainly has effects. The effect is actually quite small. On the other hand, is that if you look at the investment choices, let's take you and I as an example. Our choices could be in houses or in stocks and bonds, or probably in some kind of partnership or Madoff. I guess that's our choices, right? But in China, actually, Chinese people learned long ago that the stock market is purely a machine for the government to suck up all the money. So they actually distrust the stock market. And because of that, then they left and other vehicles are not that much available to them. So for them, there's only real estate probably the only market they should go in, or they can go in, because they can see it, they can feel it, and they can sell it if they want to. I mean, very few of them sell it, but at least they can see it and feel it. So from that point of view, the Chinese government policy so far hasn't made too much a dent on the bubble. But apart from that, there's another important factor is that, as I said, I think the first tier and second tier city will be very safe because to us or Americans buying houses, either for investment or live there. But in China, there's other factors being considered. One is education, another is healthcare. You will not get a good education or healthcare in any other cities other than the first tier and second tier. So buying a house also means that you can have access to life, basically. Think about that. I mean, the value is very difficult to judge.
Okay.
Yeah.
Sir.
I had a question pertaining what is interesting in China is this confounding trend between weak stock markets and huge number of initial public offerings, especially on the domestic market, on the Asia market. Could you elaborate on the potential risk of this development, please?
It is true that I think the government, as I said, the stock market is the way for government to suck in all the money. And the first round or the first two rounds of the new IPOs are mostly for people's well-connected, or we call it princelings. So it is true that there's lots of companies come to the market. But if you look at overall, the size is quite small compared to the main listing. So will that become an issue going forward? Possibly, but at this point, I think it's not my main concern yet.
Yeah. In the early 90s, Paul Krugman had a rather prescient article about Japan, where he stated that Japan would hit a wall shortly because of the declining marginal benefit that it would reap from raising its fixed asset investments. When you bring that forward to the current situation in China and the decline in marginal productivity and this kind of wholesale investment in the fixed assets as opposed to raising productivity, I wonder what you might comment about that.
Despite the Chinese growth over the last 3 decades, the productivity actually there is very, very low. I mean, you have to remember it's a country with 1.3, 1 billion people, and out of it, probably there's 250 million people earning less than $1 a day. So the productivity in China overall is still very low. I mean, whether hits a wall or at least hits a wall in certain sectors, problem. Because if you look at the Chinese sectors, as a whole sector, one sector average pay could be about 15 times more than other sectors, which is quite astounding. So would that implicate, and 10-year or 20-year down the road it will be like Japan? Possibly. That's probably another reason why Chinese never want to see the currency appreciate. So that's what happened to Japan with the currency, first with the asset bubble, then with the currency appreciate drastically, then you got Malaysia society. But in China, that situation is not I guess it's not imminent. Although there are some signs, but Chinese people can still, Chinese government can still pull many levers. For instance, one of the issues that China had benefit so far is, so-called population dividends, right? The demographic dividends. Population was young, but now with the population approaching 34, 35 years old on average, and natural growth rate is probably almost zero, the Chinese government can relax, one-child policy, and if that's the case, that could still sustain the growth a little longer. But of course, I'm talking about longer term. But I don't see that China become a Japan in not in my investment lifetime.
But with potentially a half a billion people who have still not even really been brought into the monetized economy, I would think you could continue to have a dollar a day workforce twice the size, 3 times the size of the United States for the foreseeable future, right?
Well, that particular number, I guess I don't really know if it's include, for instance, my 3-year-old son definitely is earning less than $1 a day anyway, right? So any population is about 20% people that's considered minor. Of course, in China, the definition of whether minor can work or not is a different issue. But still, there is a big pool of labor. So still, but we already see at the coastals that the cost of labor has gone up, and part of the reason is because if you factor in the distress in life and factor in the transportations, the higher pay in coastal regions certainly doesn't compensate everything. So they figure if I go back home and hold up my land and do some trade, I probably make more money. That's the reason why some of the we have seen labor unrest and some of the wage increase. But still, if you look at the wages, it's still about 1/5 of what you will pay here.